or different type of customers you might be selling. That could be another way to break it down. You can break it down by different product or services they do. When I used to work for Nestle's, they break down the business into different divisions, right? Each division is a unique business segment. And so, for example, like in Nestle's, this is done back in many years ago, so I don't know if they still do it this way. But like in Canada, for instance, they would have like a segment on selling coffee. They would have a segment in selling other beverages, which including like hot chocolates and iced tea and some of the other things that they do. They could have a segment on frozen products, as an example. They could have a segment on confectionery. So this would be based on the type of products or service distribution, right? That could be one way. Or it can be based on the nature of regulatory environment. So these are the different types. These are just examples of different types of segments that you can break it apart to help people understand a little bit better about how the company is performing. Normally speaking, then IFRS requires the company to disclose basically how you break down the segments and normally how to describe the segment. But they don't want to do extra work. If the company needs to manage the business in different ways to create those segments, to help them to manage those business, you can keep those segments the same. So like in the example of Nestle, because of the fact that we are breaking down the business into all these different lines of business, then in your segmented reporting, you can report the same way. Because the good thing about it is that you will already be tracking financial information based on those segments, right? And then you will consolidate all together. Then if that's the case, then this is good enough. They don't really have to do additional work in that regard. Now, when you do segmented reporting, I guess the question is that what would drive from a financial perspective like a segment to be reported? Now, so one of the things they would be looking for is revenue, and the other thing they look at is profit and loss, and the third thing you need to look at is assets. Now, this is the only area where I would need you to understand the calculation, to understand how they work out, to be qualifying as a segment. You need to meet any one of those ones. If you meet any one of these criteria, then it's a segment that you need to report. So that means that what did they say about revenue? So if you look at all the different segments, if each segment is covering 10% or more of the combined revenue, then that segment needs to be reported. So any one of the segments, if that segment's sales is 10% or more than the overall combined sales, then that segment needs to be reported. Are you understanding what that concept is? Everybody's okay? I'll skip the profit and loss, I'll come back in a minute. Then I will be talking about the assets, it's the same thing, because then if you have a particular segment, the total assets that they reported is 10% or more of the combined segment, then that asset would be a reporting segment as well. So your revenue, you can look at the assets and so on. Now relative to profit and losses, then you would have to look at 10% or more of the absolute amount of the combined profit, or the profit and the combined loss of those segments reporting a loss. So basically what you needed to do is you need to segregate the segment that are actually like all the segments that are actually profitable, and you would then take all the segments that are all actually losses. You would actually take the greater of the two. So whatever is the greater of the two, and then you would take 10% of that number as an absolute number. Then you go back to each segment, you don't care if they're profit or losses, as long as the number is showing 10% or more of the greater of the total losses and the greater of the total losses, then that's basically what you needed to do. Now I will show you an example how that works. So this is one of the examples that they do here. So if you take a look at the total revenue, right, which one would I be reporting as a segment? Now 10% of 2160 is 216, right? So which of these are exceeding 216? So which one of these are reporting as 216? Then you have what, sorry? C, D, and E, right? So those are three segments you need to report, right? Under the revenue criteria. Do you understand? Everybody's okay? Let's do assets first. So the 10% of the total assets is 97. So which one of these are exceeding 97? It's also C, D, and E. So you know that C, D, and E are already reporting segments that you would have to do. But let's take a look at the reported profit and losses. We said number one, you need to segregate all the profits together, add them all up. And you need to take all the losses together, add them all up, right? You take the greater of these two numbers. what's the total profits from A to E? The total is 85, you have 5 which is loss, so that means what? The total of the profit would be based on the total of how much? What would be the total from A to E, because they're all profitable, right? What's the total profits? 90, right? Would they add up to 90? Because 85 is the total, you add back the loss of 5, so that will give you 90, right? That means, and then the loss is only 5, which is the greater of the two, 90 or 5? 90 is the higher number, so you take 90 as the base, 10% of 90 is how much? 9. So you take the absolute number, you don't care about the profit or loss, so which one do I need to report? Which one of these are over than 9, or more than 9? A, C, D, and E, right? So what do I am concluding? By doing all of these testing, the segment I need to report is A, C, D, and E, right? C, D, and E is common to all three. Okay, even though they're not common, as long as you pick one on any one of these criteria, it would have to be a reporting segment. Now, A is only showing up in this test, but then A is, because they do qualify under this test, so A still has to be reported. So it doesn't matter, right? You don't have to be meeting all three. As long as you meet any one of those, then that segment would have to be reported. It just so happened in this example, C, D, and E are common to all three tests, but then A is only fitting into this category, then that means A still has to be reported. Do you understand the concept? This is the only calculation piece that I would be asking you, and I would probably ask you something like this in the exam under multiple choice. Okay, so please take a look at them and make sure you understand the idea. I just want to go back to the previous slide and talk to you about the okay, so this is one of the requirements. Sorry. Then what they also said to you is that when you add up all the different segments, they would have to be at least adding up to or exceeding 75% of the overall sales. So in other words, that if you add up all the different segments you have chosen from those tests, and you find that they are not reaching to that 75%, then you would have to use a judgment to figure out which are the other segments you do want to report. That's something you may want to think about it. Then normally, from a practicality perspective, we don't want to do anything more than 10 segments, because those 10 segments should be already representing the majority of the revenue for the company, so that's one thing. Then you do also have to take into consideration if a segment that currently do not meet any of the criteria, but you think this is a growing segment and they have a lot of potential into the future, then you might still want to add it into the segment as well, right? So that means you have to use a bit of judgment. So in other words, that if you are not meeting 75% of the overall sales, you might want to pick those segments that you think have a lot of potential going to the future. If you do have exceeding 75%, then maybe you still wanted to, if you think that segment is really high potential, then you might still want to incorporate it as part of the segment reporting. So you have to use a bit of judgment to figure out which segment you want to report. Everybody's okay? Now these are the information you do need to report. You need to talk about the general information about this reporting segment. Now these information you should already have, because if the company is managing their business based on these segments, that means they should already have financial information on these segments already. So then coming up with revenue, profit, loss, assets, liabilities, and related information is not going to be difficult. You do need to come up with a reconciliation by listing out all the different segments and then consolidating and see how that reconciles to the overall sales and profit number that you're reflecting in your financial statements. If you take a look at the annual report under the segmented reporting, you will probably see some of those schedules. So maybe that's a good way for you to figure out what they're doing here. You should explain the different type of revenue coming from the different customers and so on. And then you should identify the different sales relative to the different areas they may be selling. I think this is the last point. Tell me, why is it important? If 10% or more revenue is coming from one customer, you must disclose. Why do I need to disclose this? And why is this important? Yes?
It serves as a risk if like that one customer makes up most of your profit.
Absolutely, because that's very material, right? If you lost that customer, that company may be in trouble. So that's the reason why you do want to disclose it, so that the audience understands the significance of this customer has into the company or the business segment. you're working with. Is that okay? Do you have an idea about what segmented reporting is? What is the reporting requirement? And what are the things you need to disclose? So please understand these concepts, right? Again, the best way to learn these things is to physically take an annual report of any company. I think you work on the project earlier on Couche-Tard. Maybe go to Couche-Tard and take a look at whether they have segmented report. I'm pretty sure they do. Then take a look at how they report them. Okay, that would be interesting, just so you can practically explain how they're done. Now, what's interim reporting? Is that common for publicly traded company? Is that a requirement? What is interim reporting? Now, the annual report is including what period of the financial results? Annual report, they have a financial results in it, right? What period do they cover? The whole year, right? So for publicly trading company, what is the requirement for reporting? They report how frequently? Yeah.
Quarterly.
Every quarter. So these are the interim reporting that you're reporting. The one thing I just want to make sure you're clear is annual report has to be audited. Any financial result you're publicly traded, you have to be audited. But interim report does not have to be audited. Now, the fact that they're not audited doesn't mean that you don't work with the auditors, right? You should still be seeking their opinion and maybe have a chat with them to figure out if there's anything significant that's happening during the quarter. You should make them aware of it, because ultimately, they're the people that will have to come in and audit your books. So the more they understand your operation, the more they understand how you're performing and whatever, it will be helpful. If there's something that's extraordinary, like say if you have a big bad debt write-off or whatever it might be, you should make sure the auditors put a consent to whatever you're doing. So you're actually in compliance with the reporting requirements ultimately. So just keep that in mind. Now, normally speaking, you would be reporting the statement of financial position, right? And then you would have to report income statement, changes in equity, and you still have to do EPS as if you're required in the annual statements. Now, publicly traded company, EPS is a reporting requirement. So that means in the interim reporting, you still have to do the EPS calculation as well. So they're basically, you're reporting the same financial statements as you would normally have in the annual report, except in the annual reporting, except that it will be a lot more, less detailed, right? So this is what you needed to report, one thing. These are the type of disclosure you needed to work out. Now, many of those now, the one thing is that you do need to disclose seasonality and cyclical periods considerations, because now when you're reporting things that are actually by quarter, if this is a very seasonal business, you could have some quarters that are doing very, very well. You have some quarters that are doing very, very bad, right? Because of the seasonality of the business. If you are in that kind of cyclical business, then you need to make sure you put enough disclosure to allow your audience to understand that this is a seasonal business and to set the expectation accordingly. That's why it's very important you actually highlight the seasonality of business and what the audience needs to consider as what we call normal, right? You still have to, this is something that will be in the annual reporting anyway. Any changes in estimates, any unusual item, you still try to disclose it. Any issuance, repurchase, repayment of debts, equity, security, you still have to record it. Dividends paid is something that you would have to report on the annual report. You do it in the segmented reporting as well. And then if you have any reporting segments, then you needed to record it as well. We'll talk about subsequent events later, so in a few minutes. And those things you would also need to take into consideration. And then you also have to report fair value of the financial instruments. So just keep that in mind. Now, some of the challenges about interim reporting is the change in the accounting policy, because then you should still do retroactive application unless the data is not practically available. So anything we talked about last week about the accounting estimate changes, accounting policy changes that will still apply here in the interim reporting. Earnings per share is actually quite tricky. Now, earnings per share, as we always learn, is we do it on an annualized basis, but you still have to do an interim EPS that will make some of the calculation quite tricky, right, in that regard. So please keep that in mind. Seasonality is an issue because as I said, some quarter may be doing very well, some quarter they are not, so that can create a lot of questions from a shareholder. So that's why it's very important you disclose those and make sure people understand and set the expectation. Now, as I said, the interim reporting, the auditors are not involved, but even having said that they're not involved, you should still involve them if you think there is something they need to know. it's not a bad idea for them to actually take a quick look at your interim reporting before they get published, right, as an example. Those are all good practices to have. So please keep that in mind. Related party transaction actually is it's a lot more complicated when it comes to ASPE versus IFRS, but for the sake of this course, I just want you to understand what is related party transaction and what are the disclosure requirements. So basically speaking, basically when you talk related party transaction, you have talking about companies, individuals with control, investors, investees for investments and associates or joint control. If you have company management that are involved, that's also related party transactions. This means that the company is dealing directly with the members of the management family and so on. That's a related party transaction. Members and immediate family of the above and the other party in the management contract. So these are different examples of related party transaction. Now, what is the requirement for related party transaction? You have to discuss about the nature of the relationship, talk about how would that affect the transaction and the recorded amount, and you have to make sure that you understand that related party transaction has to be disclosed. Many years ago, when I was working as the president of one of the company, which is a joint venture between a Japanese company and a Quebec-based company, and this Quebec-based company is like a venture capitalist type kind of company, and they own many different companies as well. And our company happens to be dealing with some transaction with one of the companies this venture capitalist actually own. So we have to report all our purchases and our receivables and payables relative to that company as a related party transaction, because we're related in that sense, right? Because one of the partner of our company actually owns the other company, right? So if that's the case, then this becomes a related party transaction. You do have to disclose it. Okay? Now, why do we have to disclose related party transaction? Why do you think it's important? Because all transactions are supposed to be held at arm's length, right? They do want to make sure that because of related transaction, is there any sensitivities, right, in the dealings, in the pricing, or in the way recorded revenue and expenses that may be biased. So you have to make sure that those things are not happening. So that's why the disclosing the related party transaction is very key. So take a look at those requirements. I won't go into the detailed calculation of the ASPE, and that's something that I won't be asking you in the exam. So I just want to understand what is related party transaction, what are the implications at a very high level. So take a look at them. The very last topic I want to cover in this chapter is the subsequent events. There are two types of subsequent events. The one type of subsequent event is saying that let's take a look at the timing here. Now, under IFRS, the cutoff time is talking about the date they're authorized to issue. ASPE, if they're considering for the timing they're completing the statement. Now, what happened here is that what we are saying, subsequent events are basically saying that on the date they're authorized to issue the IFRS, okay, on the date they're authorized to issue, that means that now this is the timing of subsequent events happening after the formal statement of financial position date, but before the financial statements are complete. Okay, so this is the timing. So in other words, so if I have a December 31st year end, and then I normally issue my financial statements around March. So when is my subsequent event period? Based on this definition here. Subsequent events meaning that it has to happen after the formal statement of financial possession date, but before the financial statements are complete. So if I have a December 31st year end, and then I usually issue my financial statements by March. So when is my subsequent event date? January to March, right? That's the date. Are you okay? Now IFRS and ASPE is slightly different definition about the completion date. IFRS said it should be the date they're authorized to issue. That means they have been approved by the shareholders and they're ready to issue. That usually would take 2 or 3 months after the financial statements are usually finished and completed. Then that's the date, whatever the date they officially authorized to issue. But ASPE is saying you have to use your judgment. But whatever the time they normally complete the statement, the timing may be somewhat similar, but they could vary by a few weeks, right? Depending on the timing that you're authorized to issue versus the time you're completing the financial statement. Usually when you complete the financial statements, you still have to go through a bit of process before you can actually authorize to issue them. So that means that IFRS will have a slightly longer period, ASPE might have a slightly shorter period. Okay, so take a look at the timing here. Now, the kind of things that, there are two types of subsequent events. So let's take an example here. If in the end of year end, I made an accrual for a bad debt write-off, okay? But then subsequently, during that subsequent period, I'm confirmed that the company that I'm thinking about writing off is actually bankrupt. Okay, that's a fact now, right? Because at the time when I prepare the financial statements, I'm just guessing there might be issues in collecting this amount, so I accrue certain bad debt provision at the end of the year. Is that okay? But then in the subsequent event, it's confirmed that this company is going bankrupt. So what do I need to do? Before your financial report is finalized, because of the subsequent event, you would have to go back and adjust your financial statements to reflect the actual write-off. This is what we mean by subsequent event in this regard. So if there is an existing provision that you have set up at year end, and then during the subsequent event, if this is being confirmed, then you gotta go back and correct that provision to reflect what's actually happening. Are you okay? There's another situation where there's nothing you accrued at year end, as an example. Okay, there is a tsunami that's hitting one of my factory, okay? In January, which I didn't accrue anything because I wasn't expecting anything going to happen, right, whatever it might be. So it damages the whole thing. Then in that case, I still need to disclose the impact. I would not include everything in my financials because it's not included initially. But I still have to disclose it because of the fact that that tsunami wiped out my factory is a huge financial implication to my company. Then in that the case, I would still need to disclose the implication of this subsequent event. This could happen many times. The company may be suddenly bought out by another company, they've got a hostile takeover, whatever. There's a change in ownership or whatever it might be. These all create very huge financial implications of the company. If that's the case, you should make sure you disclose it at the time when you report that financial statements for the previous year. Is it okay? So there's two types of subsequent events that I would like you to think about it. Okay, so take a look at this. Bankruptcy is a very complicated issue. It's not very simple. I think you probably have heard a lot of issues, companies going for bankruptcy protection. Normally speaking, with bankruptcy, a company will be given time to mitigate so a company can file a bankruptcy protection period. What do they do in that period? Take a look at Hudson Bay. What do they do in that period? Anybody pay any news to those kind of things?
Like they try to find investors so that they can invest in the company?
Yes, so basically, the government, the law, right, the court is gonna give you time to try to see if you can rectify the situation. Are you able to find an investor? Are you able to find lenders? Are you able to find people who might be interested, who wanna buy out your business, whatever it might be? Okay, if nothing happened during that period, which is what happened to Hudson Bay, then during that duration of time, you cannot find any mitigation, then you have to bankrupt. This is what happened to Hudson Bay Company, right, as an example. But it's a very complicated thing. It's not as simple as what I just described to you. There's so many different legal requirements and different things that you need to get involved. But just want to make sure you understand briefly about bankruptcy. You do have to go through like a bankruptcy protection period, and then if nothing comes back, then the company will go bankrupt, and that could have a lot of. Then if that's the case, then you would have to look into liquidation, and there's a whole bunch of things that you need to do from a financial reporting perspective. So I won't go into the details. The company will go into receivership actually, right? Auditor's report, I think you covered those in your auditing classes. I don't need to tell you the different type of audit reports based on different type of opinions. I think you should be aware of those things based on what you learn in the auditing classes. Again, I won't be testing you for these information. I'm pretty sure in the audit classes they will probably test you for those. So please take a look at them. In BO2, we have talked a lot of many different type of ratios. Normally, when you talk about ratio analysis, these are the 4 different areas you need to look into. Okay, and I will give you the different type of ratios that you need to do. I assume all of you know these ratios, but this part of the thing I do expect you to know, because sometimes in cases I may need to ask you to do some financial analysis using these ratios, and you need to interpret those ratios. Now remember, when you work on ratio analysis, it's not the calculation that's important, it's the interpretation of the result that's more critical. So make sure you understand what does the ratio tell you, what are you trying to measure, what does the ratio tell you. Look at trends, right? Many times you look at trends, you also need to benchmark with something, historically, industry benchmark, any of those things to come up with your final conclusion. But as I said, it's the interpretation and the conclusion of those ratios that are more important than the physical calculation of the ratio itself. Is that okay? So please make sure you have some good understanding about these ratios. I take it for granted that everybody knows this because we've covered those in the BO2, right? And in your finance courses too, I'm pretty sure. Is that okay? So this concludes everything we need to cover for this course. Okay? Sounds like a piece of cake, isn't it? Yes. Okay, so I'm going to just remind you about the final exam. The final exam is on Wednesday next week. I think we are in IA someplace, right? And I think I published the room anyway, and you probably can see in your exam schedule. The exam is going from 9 to 12. You do need all 3 hours. You'll be given 14 multiple choice questions. 14 multiple choice questions. You will need to do the multiple choice questions in Quarkus quiz. So please make sure that you have access to Quarkus quiz on the day of the exam. That means you need to bring a computer because everything has to be done on the computer anyway, just like a midterm. Is it okay? Your problem, you will be given 3 problems, and I think 3 problems, I think. Is it 2 or 3? I couldn't remember that. I said 3, right? There's 3 problems. 3 problems, you have 3 problems in one case. The 3 problems will all be coming after the midterm. The multiple choice in the case will be comprehensive for the whole course. Okay? So please gauge accordingly to what you need to study. Now, in terms of now I would suggest that you do all your problem in Excel. Okay, and then you can put each tab as one question, that will be cleaner. If you don't want to, you can put everything into one, but just make sure you label the question clearly so the marker knows where to get the information. Now, please remember, this is an accounting exam. Every single step counts. So that means that please lay out your calculation very thoroughly so people can understand what you're writing. Now, organize your calculation in such a way that people can read it and do it professionally so people can understand what your steps are. Now, we are not able to go into every single cell and find out what your formula is. Okay, it's impossible. Okay, you only do one exam, the mark is like 40-something papers, he's not able to go into every single cell and try to figure out what you do. So if it's not explicit, then you get wrong, you get 0 mark. Very simple. So help the marker, help yourself. Make sure that you are very organized in your schedule. Okay, every calculation should be in the form of a schedule so people can follow what you're doing. And make sure all the assumptions, all the calculations are laid out, just like what I did in the class for you, so people can understand what you're doing. Write it out. It doesn't take that much longer to just write out the formula. Is it okay? Okay, so please practice, and then they will find your case. You'll have one case which will be comprehensive that will cover everything for this whole course, right? So let's take a look at the, now believe me, you would need all 3 hours, and it's going to be very tight, remember 3 hours. I don't know what your preference is, but many times with multiple choice, I always recommend students to consider doing at the very end of the exam. Then this way, in the event that you really press for time, it's not the end of the world. You can still guess, right? You still get 1 out of 4 choices that you can probably get it right. If you're not really a lucky day or not lucky day, I guess, then you can still do well. But anyway, I won't count on it, but I think you should still leave yourself probably around at least about 30 minutes to 40 minutes to work on multiple choice questions. I think I put some time suggestion for you to how much time they spend for each question. Now, for the cases also, please make sure you do spend close to at least 40 to 45 minutes to work on your cases. We're not going to have enough time to write something. Now, for the case, please, for this time, you do need to start with situational analysis, meaning that you always have to start identifying your role. Now, when I say identify the role, I'm not going to say that I'm being a controller, I'm being a VP of finance. This is not what I mean by role. Role meaning that what are you trying to do here? What is the purpose that you want to do here? That's what the role is about. And then make sure you talk about stakeholder preferences, stakeholder identify. Couple 2, maybe that's the maximum. You don't have a lot of time. Who are the key stakeholders and what are their preferences? And then make sure you also talk about constraints that should only take you out of the 40 minutes, maybe only 5 minutes to do. Okay? You need to type faster, definitely, right? That's one thing. Then you address every single issue. Make sure that now you don't have a handbook with you, so you can't quote the handbook section, but you should still lay out. First of all, identify what the accounting issue, and then use the case fact to explain what is the issue and the implication of the issue, and then you can quote according to the handbook relative to a particular concept. Let's say, I'm just making it up. If it's a asset retirement obligation, you can say according to IFRS, this is what the definition of an asset retirement obligation that you need to do, blah, 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 whatever. Then this is what they've done, and this is why they have a problem, right? And then you make a recommendation accordingly. Is that okay? It's always a good idea for we call it these issues, but from the CPA term, they call it the assessment opportunities. Every issue that you need to talk about, try to make sure you do have a conclusion. That means it's a recommendation. Now, IFRS, with the CPA exam, we do ask you to follow the CPA way of case writing, right? What are the 3 steps? What are the 3 steps of CPA way of case writing? Everybody knows?
Issue.
Identify the issue, then you assess the situation, and then the next one is you analyze the issue, right? And you come up with a recommendation. That's what the step you need to follow. Is it okay? So identify the issue using the handbook to explain why is that the issue and what the implication of the issue. Then analyze it. What are the things you think? What do we have the options? If they do have options, pros and cons, and those kind of things, and then come up with a recommendation and talk about the implication as well. The key thing is when you do the analysis and the recommendation, please link back to your situation analysis factors. If it's a constraint or there's something to do with the stakeholder preferences, state it, right? Explain it, link it back together. Is it okay? It's not a bad idea for this kind of exam to have an overall conclusion, especially if there's a ratio involved that you will need to restate. Is it okay? So think about those things when you're working on the cases. Now, for this course, after the midterm exam, we covered chapter 15, which is shareholders' equity, right? We did talk about shares that can be actually purchased on subscription. So please go back and revisit what those things are. And then we did talk about the share repurchase, which is another thing. And in this chapter, we focus on dealing with cash dividend, stock dividend, and stock split as well. Understanding what the accounting implications are is very important. In chapter 16, there are 3 key topics we cover. The first one we did cover about is the hybrid instruments. Talk about debt and equity hybrid instrument, and you need to understand the implication both from an IFRS and ASPE perspective. And then we did talk about stock options, and we did talk about share appreciation rights. There is a slight difference between accounting ASPE and IFRS relative to share appreciation rights as well, so take a look at them as well. So those things I would like you to go back and revisit. In chapter 18, then we started to talk about deferred income tax. Every time I ask you to do deferred income tax, there are 3 steps you need to follow. The first one is that you always need to come up with the reconciliation between the accounting income and the taxable income, and please do not lose any marks for doing the reconciliation. That's the most straightforward part of the whole calculation. And then you will be getting then you will have to do a DIT schedule. Now, if you do have loss carry forward, those should be included in your DIT schedule, right? And you do a DIT schedule correctly, the DIT schedule will tell you whether that's an asset or liabilities as well. So please practice, and then you will need to come up with the financial reporting presentations, where they should be included and what amounts they should be included, and we went through those cycles with you. And then we talk about earnings per share, which you have to understand the basic and diluted earnings per share calculations, understanding all the different rules, what should be included in the basic calculations. And we did talk about contingently issuable shares, which will be some of the very tricky ones, stock dividend and stock split, the implication about how those things are, that will affect the number of shares and calculate your EPS. So please make sure you go through that. And then for diluted earnings per share, there are the different things that we normally talk about that would affect your dilution, which is basically stock options could be one, contingently issuable shares could be another one, and then you'll be dealing with convertible bonds and convertible preferred shares. Anything that's convertible, right, that could potentially have a dilution impact, and they should all be included under the diluted earnings per share calculation. It's not difficult. An EPS is a very, very straightforward calculation. Just make sure you practice a few times to understand what the implications are. I think question 2 that I take up with you in class is by far one of the more complicated EPS calculation. And I indicate to you that I give you a question 3 which you can practice on your own, and I've posted the solution as well, so please practice those things so you understand what they are. And then we go into accounting errors, which we talk about the 3 different types of accounting errors. Then you need to understand the implication for all of those, and then we go through this chapter today. Now, before the midterm, I'm not gonna go back. Now, also one other thing, I did not cover in person with you, but I did send you a recording that talks about the leasing under SB, which I would expect to have some understanding of those. And what, I think they're very similar to IFRS, except under the lessee side, they're quite different. And under the lease sale, lease back, they're very, very different as well. So please make sure you understand what those implications are. I could possibly ask you those questions either in the case or maybe in the multiple choice. Okay, so please make sure you follow those things here. Now, one thing I'm gonna give you a bit of hint, you're definitely gonna be tested is definitely the deferred income tax, because it's a very complicated question, and that would be a very common question you'll be seeing from time to time in CP exams, so just make sure you do well. That's basically everything that I wanna cover, but please start it with, again, this is what I always say to you. I would start with my supplementary questions, but as I said to you, because the supplementary question hopefully give you a good foundation of the concept. And then when you work through each of those supplementary questions, please pick other related questions in Wiley and practice them as well. If you find a question that I did not pose the solution, that you would like to get a solution, send me an email and I can send you the solution as well, to take a look at them. Now, please spend time to practice, right? And then I think I said to you, correct me if I did say this, but if your final exam score is higher than the midterm, I'm gonna shift 50% of the weighting for the midterm to the final. So hopefully everybody will do a lot better this time, which traditionally that's always the case. So hopefully you will be keeping the trend as well. Everybody's okay? Any questions? Anything I can help you with? No? You're gonna survive? I hope you'll survive. You're all smiling. Hopefully next week after the exam as well, I hope. But anyway, so good luck for all the exam and for this course as well. I do want to thank you all for being in my class. It's fun. I'll be seeing probably some of you in the winter term as well. In the meantime, please don't forget to fill out my course evaluation. So far, there's only one student who filled it, I believe, for this course. So please make sure that you fill out the course evaluation. I have to make it a habit that if I get poor response rate, that whoever that's in my class, that's in my future class, I should deduct 5 marks from them in the future, right? Maybe that's something I should start doing, I guess. I'm just joking, Okay, so please remember, if you don't mind, take a moment to complete the course evaluation. It will help me to gauge my teaching in the following term. Is everyone okay? Okay, have fun, everyone. And then, oh, by the way, you all get the project 2 marks. I think I posted the marks already, right? Have you seen the marks? No, maybe I didn't release it. Okay, I should go ahead and release that. That's why I didn't hear from anybody, I guess. Okay, I should go ahead and, but your project 2 marks is not project 2, your case assignment 2 marks are released, but I'll make sure it's being released. But I think majority did very well for this assignment. So keep it up, keep up the same pace into a final exam. All right, if you have any questions, let me know. I'll be posting my office hours shortly as well, by the end of this week. I will have office hours sometime this week, or maybe this week as well, okay? Okay, take care everyone. Thank you.